I'm going to show you how real-time news releases and the market open can send shockwaves through the market and what is actually happening with the level 2 order screens, with the buy orders and sell orders. What happens with spreads and commissions, market liquidity and volatility, and how to trade this. Because your little support and resistance or other technical analysis are simply not going to work when these news announcements drop. Whether it's news being released, economic reports, earning numbers being released, geopolitical politics going on, the opening, these all have major impacts onto the news, and I'm going to show you how to trade it and what to look out for. I appreciate if you guys take this time to like the video, subscribe, and if you guys have any questions, you guys can always reach out to me on social media at MoneyballAustin. Let's get straight into it. Okay, we are live here on forexfactory.com looking at the news, and today is a very special day. Like I said, we are going to be looking at the news release, how that affects the market, but as well as the opening, because there might be no crazy news announcement happening for the day, but the opening happens every single day. So what I recommend doing is I use forexfactory.com. What you really want to pay attention, let me scroll in a little bit so you guys can see, is pay attention to the major news announcements. If you see Canadian coming out with a major news announcement, you probably want to avoid the Canadian market pairs, currencies, or the markets, because that's when the Canadian markets, at least, because that's when the most liquidity, volatility, it's very unpredictable where price is going to go. But they do have a very nice filter here on the sidebar to where you could include smaller news, but I really don't click on that, but it will bring in some liquidity, and that's how you'll just see randomly a lot of movement happening at a certain time. That's probably because a smaller news announcement is coming in. We're talking about the big daddy, the big news being dropped. Everybody wants the big money. Well, in order to make the big money, we need to be trading the big boy news. So I'm going to keep this to red, major news only. I always have it click to orange, red, and holidays, which is the little gray box. But you can see, you could change it so you could have it for what news is coming out for the week and all that, go for week to week. But this is what you got to do every single day. Just make sure you have a scan, because a lot of people will lose their account during this time because they are not aware of the news. I get that message almost every single day. People blowing their account because they're unaware of the news releases happening, as well as not using a stop loss and risking too much. So you'd be surprised. That's why 99% lose their money. News release gets dropped in 14 minutes. We are going to skip towards that. But first things first, we need to have a look at the screen. And let me break this down to you, because this is how the market moves. This is the true liquidity. You are going to see it right in front of your eyes. We are here on the NASDAQ. And let me break this down. What you see here on the right, I will have it so I'm a little cut off from the screen for this video, because I want to blow up the DOM a little bit. And maybe you want to look at the DOM for about 30 seconds and then rewind this video, and you're going to want to look at this other thing that I'm about to show you. And maybe you want to rewind it again and look at what the candlesticks are doing, because a lot is being thrown at you when you are day trading, scalping these lower time frames. So here on the DOM, these are live pending orders here. Okay, you have some to the buy side and you have some to the sell side. I want you to understand and absorb the information of what is happening in the market when a news release is being released and how it affects the opening. And what you're going to notice here, there's not much movement. You can see these numbers changing. These are buy orders and sell orders with pending orders above price and below price, okay? And it's not moving very quickly. But you're going to notice as the news release, these numbers are going to drop altogether because traders are removing their orders. This is professional money. They are removing their orders because they don't want to trade the open or major news announcements because it's unpredictable. I don't care who you're listening to, it's unpredictable. Okay, so that's what the DOM is. What you're going to see here on the bottom right here, I'm circling it with my cursors. This is a 500 tick chart. So once 500 individual trades have been taken, it will print a new candlestick. It could take 5 minutes, it could take a minute, it could take 1 second or 2 seconds, depending on how much liquidity and volatility there is in the market. So you can see right now, just like the DOM, the DOM. The ticker symbol down here, how it's at 277, 276, 275, 274, it's going down very slowly. But once 500 trades have been taken, it will then print a new candlestick. And once again, you're going to want to watch this as the news announcement is about to be dropped, okay? Because it's going to be moving really quickly. And what I have here on the chart is just 500 ticks, but this is the same thing what is going on bottom line into the markets, whether you're on a 1 minute chart, 5 minute chart, 1 hour, or whatever. I'm going to fast forward to the news release that's going to be released in 9 minutes so that we can catch the news and see what's happening with these markets, with the DOM, with the ticks, and with the spreads and volatility. Okay? Okay, we are back 50 seconds until the news being dropped. 36 seconds. Let's have a look at the DOM. Okay, wow, look at that, guys. You guys can see over here on the right, the DOM has completely changed. People are removing. Look at the spread. Top right, look at the spread. 7 ticks. You're paying basically almost $50 per contract when this news is being released, and it's about to drop any second. There it goes. There it goes. Panic. Pound the alarm. Pound the alarm. Market's going. Market's going. 500 ticks. All right. Liquidity. Whoa! There it is. There it is. This is how emotional traders trade. Even I'm getting excited, and I've been doing this for 8 years. It's, wow! I just want to jump into the markets and lose all my money all at once. Okay, so the spread is around 7 ticks, 10 ticks. Once again, DOM right here. Notice how the orders have removed. All right, they have no pending orders. Everything's being executed by straight up just insta buying or insta selling the market. Okay, this is nothing compared to the open. If you look right here, you guys can see the tick charts going down, 500 down to 450. It's moving a lot quicker. Over the last, it hasn't even been a minute. Over the last minute, it's printed 10 candlesticks, and we're not even a minute in. Versus the last 15 minutes, it's taken 15 minutes prior to that in order to print those 10 candlesticks. This is the liquidity. Understand, this is liquidity coming into the markets. Looks like we have a big buy order sitting at 15,023. We can have a look. Whoa, look at that, guys. 1 minute time frame here so you guys can see everything. Gold, silver, stocks, Euro USD, depending on, whatever one you guys are looking at, but this is the same stuff that's happening. You want to look at Euro Yen? Okay, look at Euro Yen. Extremely volatile. Spread widens. It's shooting up for a minute, then it's shooting down, then it's instantly starting to shoot up again. The same thing is going on every other market out there. Spread widens, huge market liquidity, volatility comes into the market. Your support and resistance lines, your supply and demand zones mean nothing when these geopolitical news events or global events or earnings or NFP numbers, bank rates, press conferences come out. They mean nothing. Okay? It's going to react based off of what they say and what the news numbers are. Swing trading, you're going to have to play with this. That's fine. You're swing trading. You're looking to hold trades for a couple days to a couple weeks. You're going to be in the news. That's just part of it, but you manage risk accordingly. But if you're day trading or scalping, don't even trade it for the first 5 minutes or 5 minutes after. What we're going to do now is we're 3 minutes into this. We're going to skip forward to the market open, and this happens every single day. It's not like this NFP number that comes out once a month. Opening happens every single day, and I'm going to showcase to you. You think this is real volume coming in? Just wait till you see the opening. All right, so let's fast forward to the opening, and I will see you guys then. Okay, we are less than 1 minute, about 35 seconds until the market opens. We're here on the 500 tick chart, and I want you guys to see the amount of volume and volatility that there is in the first 60 seconds. Not even that, the first couple minutes. The market opens, there it is. Now look, guys, look at the DOM. Here we go. Keep an eye. We saw this change. We're going to see this change rapidly, but not only that, keep an eye on this tick chart. See how much quicker it is moving. In fact, since 1 hour has passed, it has printed only 115 candlesticks. Yeah, we can even look at gold. What is this? ES, the S&P. It's been 1 hour since that news release from down here, and we've printed a bunch of candlesticks, 280, a lot different than the NASDAQ. Wow, that's incredible, eh? We look at gold as well, just massive moves, right? Faking people out to one side, reversing. It's doing a lot. So huge volatility. You guys always got to manage the risk accordingly. But you can see the pending orders are coming in again. They never disappeared like you saw in the news because the news is too unpredictable. So you see the pending orders sitting there. Honestly, price isn't doing that much. Everything's already been factored in. The market has found kind of its opening range of where it wants to play in because of the news releases that came out earlier. And this is the same thing for any other currency pair. You look at same thing, very strong moves. These technical analysis, they really don't apply to these news releases, all right? Algorithm is typically trading these type of moves. You saw it being removed, all of the pending orders. These are just algorithms buying or long, short, based off of the fundamentals and the whole report that gets released with this. And they scan through the whole thing in a millisecond and they come up with a buy signal or a sell signal. And all these markets are moving in a split millisecond based off of that decision. Okay? Doesn't matter. Pound CAD, you're getting gaps. You've got to be careful with these gap moves, okay? Especially holding positions over the weekend. It's not something I recommend. We saw that happen in gold. If we look at gold really quickly over the last couple of weeks, this massive rally and this gap happened from the Israel versus Palestine bombing. Massive move. Yeah, we had some great little supply zones in here. It blew through those areas. Why? Because of the events and people putting their money into a safe haven currency. Okay, so that's totally understandable where you probably don't want to be selling gold anytime while it's sitting up in these little areas of supply. It's in a huge demand right now. Bombing's going off. People are going to flood their money into gold. And that's why you've also seen oil skyrocket as well during that time. It's very important stuff to understand, but it can go over people's head, especially for new traders. And new traders might think this is really boring, but it is extremely important to learn as a trader if you want to have success in this game. I want to bring your attention to over here. This is 6:59, 29 minutes after the US Open. This is 6:59 and 57 seconds. Okay, in 3 seconds, the news gets released. Keep in mind, this is a 500 tick chart. So once 500 trades are executed, doesn't matter if it's 1,000 contracts being traded or only 500 with a bunch of traders. This move right here opened up at 7. Oh, not even that one. Here, after this big move up, this is where the candlestick opened at 7. That candlestick got finished and printed before 1 second even ticked. And then this candlestick came out, closed before 1 second even ticked. Now we're 3 seconds in and we've printed 3 candlesticks. That's 1,500 trades taken during the first 3 seconds of this ES right here. Okay, that's absolutely insane. Not only that, but we continue on. And within 30 seconds, we can continue this on. Let's go to 1 minute in. 1 minute in, right here. We have printed, how many candlesticks is that? 23 candlesticks. What is 23 times 500? 500 times 23. There's over 11,000, we'll call it 12,000 trades have taken place in that first minute on the ES alone, guys. How much money is being thrown into these markets? Hundreds and trillions of dollars are being thrown around in the markets every single day. Okay, you saw it right here with your own eyes in front of you. In less than 60 seconds, 12,000 trades were taken during that time. That's absolutely bonkers. And since I started talking about this, we've seen these candlesticks being printed. Quite a move. You don't see that too often where it just flashes in front of your eyes. Literally just like instantly printing these candlesticks. It's like they're printing money. I feel like the Federal Reserve here. So you literally have 23 candlesticks, 12,000 trades being executed. How many contracts is that? That's insane. That's bonkers. Based off of the liquidity and volatility that comes into the market during the open and these news releases. How do you remove this? How do you fix this, guys? We're looking here on the 1 minute chart. 500 tick charts. Simply what I do. I don't trade the first 5 minutes before the news comes out and the first 5 minutes after the news comes out. If you're swing trading, it's something that you have to deal with. You're going to have to trade during this time. I wouldn't recommend trading. I would implement that rule if you're trading 1 hour or below as your time frame of what you're entering. If you're using the 4 hour or daily, it shouldn't be, it's less of an impactful thing when it comes to swing trading. Plus, you only have a limited amount of time on the chart. So swing trading is fine. But if you're day trading, scalping, remove it altogether. Watch over this again. Look at different areas of the screen about how you can see the orders coming in, orders being removed, how many are being executed. It's all extremely important stuff that's not talked about enough because it's boring. All right. There's a lot of delusional people out there, but hey, I appreciate you guys staying till the end of this video. I appreciate the like, subscribe, and if you guys have any questions, you guys can reach out to me on social media at Moneyball Austin. I'll see you guys in the next one. Cheers. Bye-bye.